Sam Stovall joins us today, CFRA Research Chief Investment Strategist. Sam, you've been looking at sort of earnings expectations for the quarter. You quote Yogi Berra, it ain't over till it's over. What is your thought about the current season?
Well, Carl, good point about Yogi, because we started the quarter, S&P Capital IQ consensus estimates were looking for about a 3.2% rise that then dropped to about 2%. But here we are now looking for a greater than 4% increase. And with such a very large number of companies reporting this week, I obviously would not be surprised if this ends up being the 60th out of the last 62 quarters in which the actual results exceed end of quarter estimates.
Do you think there's going to be pent-up relief post-election once we do get these results?
Well, historically, that is the case, that going back to 1992, which is as far back as S&P has sector-level data, all sizes, styles, sectors posted advances along with 97% of the sub-industries. So historically, the market does breathe a sigh of relief. And also, I think that history is going to be tweaked a bit this time around. Normally, the market, if it rises from July 31 through October 31, the incumbent person or party has been reelected except for 2 times. One of them was in 1968 when LBJ stepped down, Hubert Humphrey ran for president. We had the war in Vietnam as a very unpopular situation. This time around, we've got inflation and immigration. We had a Fed lowering interest rates back in '68 that did not help the incumbent. And anecdotally, we also had conventions in Chicago. So we'll see right now whether the 5+% advance this time, which is equivalent to what we saw back in '68, proves that the incumbent will not get reelected.
So, Sam, you're also looking at rates, and you think the Fed is going to be slower to lower, just 2 25 basis point cuts this year?
Good morning, Deirdre. Yes, we think that the Fed will be taking a moderate approach. The feeling is there's no reason to rush into this, especially when GDP is expected to be up 2.8% this year, 2.4% next year. We're not going to see that 2% threshold on core CPI until 2026. So I think the Fed wants to maintain its lower trajectory, but will do so at a measured pace in case we do see inflation pick up once again.
And Sam, what are the chances of that? I mean, we were talking about this earlier, given the election's just 8 days away now, and both candidates have policies that would and could restart inflation. Are you comfortable saying that you don't think it's going to reaccelerate?
I think that we're not going to likely to see it reaccelerate. Maybe it could end up stalling a bit at these upper levels. But I also think that a lot of what the candidates are saying are really just to get the voters interested. Whether they are able to follow through with that is another very big question. Also, if we end up with a split Congress, I think that much of what the 2 candidates have been promising is not something that will be fulfilled.
Yeah, we're trying to build in all those scenarios. Sam, just 8 days away from that election. Good to see you. Talk soon. Sam Stovall today.